Recession, a troubled economy, or a sluggish real estate market, a business in need of additional working capital, medical problems, prolonged illness, even serious injuries or an unexpected death. Unforeseen events can strike anyone, anywhere, anytime. And when they do, it can be disastrous.
Circumstances change, so do people's finances and their financial needs. Accidents, injuries, changes in the economy can cause people's situations to go from good to bad in a hurry.
When the unexpected happens, things change quickly. Finances become depleted, and millions of people and businesses each year find themselves in need of extra money. Money they frequently cannot get from conventional sources like bank loans and home equity loans due to a lack of acceptable collateral. This has created a need for creative alternative financing, sometimes known as the cash flow industry.
The cash flow business is a secondary financial marketplace that caters to individuals and businesses who don't fit into the conventional financing mold. Banks have very strict lending requirements, especially now. There's millions of people and businesses who, for any number of good reasons, can't qualify for conventional financing. They're still good people, they still need the money, they just can't go to a bank to get it. That's when they turn to alternative financial sources. When people need extra money, they usually think of a bank. But banks only lend money when it's secured by real estate, such as their house. And if they don't have a house or they can't pledge their home as security, they can't get the loan that they need. That's when they need to turn to alternative financial sources, such as future assets. Many people and most small businesses are unaware that they may own other types of assets that can be sold or leveraged to generate immediate cash. These are future assets, payments that are due to be received from seller finance mortgage notes, structured settlements, annuities, lottery winnings, casino jackpots, even business-to-business invoices, consumer installment contracts, health club memberships, even the proceeds from future lawsuit settlements.
For some, owner financing or seller carryback financing may be an excellent way to generate qualified buyer interest and sell real estate, especially in today's market. In addition to a quick sale, carrying back a note creates a steady stream of future payments that can be sold for immediate cash.
Many potential home buyers and investors have plenty of cash for a down payment and good credit, but under current mortgage guidelines, they're not able to qualify for a loan. By offering seller financing, many sellers are able to sidestep the mortgage industry and gain immediate access to that large pool of motivated buyers. Like any real estate transaction, there are many important factors to consider, and I'd advise anyone considering seller financing to do their homework.
Another cash-generating option is the sale of annuities such as structured settlements, lottery winnings, or casino jackpots.
Let me explain how selling an annuity works. Insurers make their money by holding onto your money that you would otherwise be receiving over time. We pay you your money when you need it. If your payment schedule no longer works for you, it may make sense to sell your payments for a large lump sum as opposed to waiting years to receive the payments on your current schedule. If you have bills to pay, education, or if you want to start a new business, this may make sense for you. There are three important factors in determining the present value of your structured settlement. First, when are the payments due? Second, who is making the payments? Third, are the payments life contingent? First, we want to know when the payments are due, because obviously a payment due next year is going to be worth significantly more than a payment due to you in 20 years. Second, you're going to want to know who's making the payments. A lot of financial institutions and insurance companies have recently been downgraded. Just because you were promised a payment in 20 years doesn't necessarily make it a sure thing anymore. And third, life contingency payments. If you're getting older or you're in poor health, the promise of getting paid in 10 years may be risky. So it may make sense to go ahead and take the cash value of your existing annuity now.
Lawsuit funding and litigation financing is another way to generate immediate cash from future assets. Plaintiffs and contingent fee attorneys involved in personal injury and wrongful death lawsuits can receive cash advances that are secured by and repaid out of a pending lawsuit's anticipated settlement.
Lawsuit funding is fast, affordable, and easy to qualify for because it's based solely on the merit of the case. There's no income requirements, employment requirements, and bad credit is a non-issue. Plus, it's non-recourse, which means if they lose or the case doesn't settle, they don't have to repay the advance.
For individuals and businesses looking to capitalize on future assets today, the experts at TriMark Capital Funding can help by providing effective asset and cash flow management strategies, thus allowing you to access the funds you need right now. TriMark Capital Funding, innovative solutions for converting cash flow into cash. To learn more, visit wecanbuy.com or call 1-877-WE-CAN-BUY, 1-877-932-2628.